So, let's talk about what's going on with Mullen Automotive, ticker symbol MULN. It's been a while since I last covered this stock, and honestly, not much has changed, except that things might be even worse now. Mullen is currently trading at just under 60 cents a share, sitting at around 59.5 cents. That's after multiple reverse stock splits and countless attempts to breathe life back into this struggling electric vehicle company. If you've been following this saga, none of this should be surprising. But if you're tuning in after a break, buckle up, because the situation has become more desperate and more absurd. The most pressing issue right now is the looming threat of delisting from the Nasdaq. Mullen hasn't been able to maintain the minimum $1 bid price required to stay listed. This isn't their first run-in with Nasdaq compliance, either. The company's management already performed several reverse stock splits to artificially inflate the share price. Most recently, a 1-for-100 reverse split went into effect on June 2, 2025. But even that couldn't stop the decline. The market clearly isn't buying what Mullen's selling, literally or figuratively. And it gets worse. The company has also fallen below the required $35 million market cap threshold. That triggered another non-compliance notice from Nasdaq. Mullen has until late August to fix this by maintaining a market value of at least $35 million for 10 consecutive trading days. Given how the stock's been behaving, that seems unlikely without more artificial moves, and we've already seen where that path leads. Then there's the elephant in the room, the financials. Mullen posted a net loss of roughly $740 million for the fiscal year ending September 2024. Meanwhile, revenue was barely over $1 million. That's not a typo. This is a company burning through hundreds of millions and generating practically nothing in return. It's no wonder investor confidence is at rock bottom. But what's truly galling is that despite these horrific numbers, CEO David Michery is still pulling in a massive paycheck. His base salary sits at $750,000, and he received over $40 million in performance-based stock awards back in 2023. How can a company hemorrhaging cash and delivering zero meaningful results justify that kind of executive compensation? It gets more bizarre. In a move that feels more like a headline grab than a serious strategy, Mullen recently announced they'll be accepting cryptocurrency for EV purchases, including Bitcoin and something called Trump coin. That's right. A company that can't sell vehicles at scale is now making headlines for accepting meme coins. If this is their idea of innovation, it's hard not to laugh. It reeks of desperation, another attempt to stay relevant in the news cycle without actually fixing any of the fundamental problems. Legal issues are piling up too. Mullen just settled a 4-year-long legal battle with GEM Group. That case had been hanging over their heads for years, and while the settlement might bring short-term relief, it only adds to the picture of a company constantly on the defensive, reacting instead of building. Then there's the situation with their subsidiary, Bollinger Motors. Earlier this year, Bollinger was placed into receivership due to financial disputes. Mullen swooped in and increased its stake to 95% to prevent a complete collapse. But let's be honest, that's not a power move. That's like doubling down on a bad bet in the hopes it'll somehow pay off later. All of this points to a management team that's out of touch, overpaid, and under-delivering. The reverse splits, the gimmicky headlines, the bloated executive compensation, it's all smoke and mirrors. They keep trying to manufacture momentum instead of creating real value. And the market knows it. That's why the share price keeps sinking, and that's why retail investors, those who haven't already abandoned ship, are growing more and more frustrated. So here we are. Mullen is on the edge of delisting, again. The stock is struggling to stay afloat, again. And the people running the show? They seem more focused on preserving their own paychecks than actually turning the company around. If you're still holding this stock, it might be time to seriously reconsider why. Because unless something dramatically changes, and fast, this story looks like it's heading toward a disappointing end.